Hi, I'm John Vucicevic, and this is Rob Lambert's AssetProtectionTraining.com website. This course is about converting an IRA to a Roth. Very critical point in time happened in 2009. 2009, the conversion process between IRAs and Roths became very popular. And here's a few reasons why that happened. And you may have had conversations with your financial people or tax advisors with respects to this, and this is the reasons why. So what would you convert your IRA to a Roth for? What are some of the reasons? And one big one is that at 70 and a half, the required minimum distributions do not apply to a Roth IRA. They do to an IRA, but not to the Roth. So that's a big reason why. The second big reason is that all the income that comes out of a Roth is tax-free. Now, before 2009, if you had an IRA, you could not have a Roth if you had over $100,000 of gross or adjusted gross income. In 2009, that income cap was removed. So it didn't matter how much income you had or how big your IRA was. The tax on the IRA was not counted as far as an income calculation. So anybody with an IRA could convert it to a Roth. The question is, should you or not? So when you re-characterize, which is what the IRS calls changing the integrity of the money inside of an IRA or any other type of plan that's never been taxed, you re-characterize it, you physically change its composure, that creates a tax bill. So changing your IRA to a Roth will create current income tax. And for those of you who know, it is all ordinary income, so it's going to be based on your tax year. Clarity's sake, changing your IRA to a Roth, anybody with any form of income can do this, because that taxable income is not calculated as far as earned income is concerned. It would be considered passive income and not calculated as part of that income distribution piece. So, should you convert or not? It depends. Depends on your current tax rate. It depends on your age at conversion. Depends on your current rates of return and your expected returns. So here's an example of an IRA. So let's say that you had $100,000 in your IRA in 2009. You converted it to Roth in that year, so you got taxed over 2 years. There was another cherry, or another reason, if you will, to convert in 2009. They made it very beneficial for us to do that for everything that we've talked about already. You know, and this is an editorial, but there's $17 trillion in money that's never been taxed sitting in these qualified accounts. This is, I think, the motivation from the government standpoint as to why they wanted to get this money moving around. So you're 70 and a half, let's say, and you don't want to take this required distribution. Okay, so the goal then is to avoid that, and your tax bracket's 28%. So the next slide is going to look at the impact of what this means to that particular IRA. So here's the parameters again. So let's say you converted it in 2009 and you made it a Roth. Well, you're in a 28% tax bracket, so that $100,000 isn't $100,000 anymore, it's $72,000. But it's a Roth. So you don't have, again, the required distributions. As being redundant here, you don't have all the other strings that are associated to an IRA with the Roth. Now, when we look at the current returns and the expected returns, how old are you going to be just to recover the tax on this Roth? So at 1%, you can see it, you're going to be 103 years old. So if you're a conservative investor and you got your money in the banks and the CDs, you know, you're going to be a pretty old person before you even get back to the $100,000. If you're at 3%, you're going to be 81 and a half. If you're at 5%, you can see the screen there, 77.2. And at 10%, it only takes 3.4 years to recover that tax bill. There's opportunity cost there. There's all kinds of considerations that need to be addressed. So the conversion to a Roth really requires some tax planning in lieu of the feel goods about not having to take a distribution, not, on all the other benefits of having a Roth. So consult a tax advisor along with the financial person to make sure that that decision really makes sense. I'm John Vucicevic. This is Rob Lambert's AssetProtectionTraining.com. Talk to you soon.